Hello traders, welcome. I'm Francesco. FreeFX is my channel on YouTube. So I just wanted to say, this is kind of between the two of us. I've been doing a lot of thinking about what I need to do as a trader. I've been sort of doing this for about 8.5 years, part-time, just kind of trying to learn the ropes. What I've been thinking about is, how to become a better trader. But it's not just about one thing. You're always kind of thinking kind of wider. So my kind of focus now is to get some kind of experience in coding in Pine, so on TradingView, and trying to get some testing done. I'll need some help, and some of you already kind of reached out, which I'm really grateful. I hope that with that and videos from Big Bits and other sites, I can maybe just kind of get to a point where I can test my own strategies in the next 6 months. Might be a bit ambitious, I don't know, but see how much time I have. Anyway, but as part of that thinking, I'm still trading demo and hopefully live, but some of it will be just kind of my normal trading, which is kind of more around kind of round number levels and seeing if things move in a day and try to kind of get on top of that. So kind of momentum trading, and try not to get emotional and kind of carried away on a good day, and try to kind of be happy with profits. I did really well previously, and hope to do even better this year. November to January was a bit of a rubbish kind of period, some bad trades, and so I'm kind of recovering a bit from that on my demo. My live account since January is fully funded, but I'm just kind of waiting to see how things develop with the demo again, and also coding and sort of getting ideas. So I'm kind of in two minds as to whether to start trading straight away again this year on my live. That doesn't invalidate anything that I'm kind of publishing, because I'm just kind of, it's part of my thinking is to keep involved in currencies and trying to really think about things constantly and keep my eye out on certain currency pairs. As part of that, I'm kind of trying to do this as an intro to say that this currency pair is the kind of prime example of what happens when we look beyond the normal pairs that we're all familiar with, sort of majors or some other exotics. This is the Argentine peso, and it has been a rocket. I mean, this is going back to the late 90s. If you look up here, you might just see it. It's basically almost 9,000% up. And if that doesn't mean much, I mean, just this is a monthly chart, and just look at the progression of up candles, monthly candles, since basically the start of last year. So it's like more than a year of constant appreciation, and that's on top of decades essentially. What's really important about this is kind of how to compare things. So if I actually showed you that the S&P 500 compared to this was valued as such, you can see that it's 237% in about, if I put it to about a decade, it's about 196%. I mean, as I squeeze the chart and zoom out, these numbers change constantly. So from the start of data on this chart is 337% for the S&P versus the 8,294% of this currency pair. I'm just saying this for people who deny the value of trading currencies as a long-term asset kind of investment. If you know what you're doing, if you've kind of taken into account all the volatility, spreads, illiquid periods or currency pairs like this, the kind of brokerage that you use, how quickly you can liquidate a position in an illiquid kind of instrument like this, potentially being stuck in a trade in a bad kind of patch, because there has been one or two here which are pretty severe by the looks of it. So, considering all that, and then you've got, negative swaps. If one central bank has a high interest rate than the other, how are you going to sort of cushion that? But even so, considering all of that, if you kind of go back to this 2011, so for a decade now, the S&P is 213% up, and this is more than 2,000%. So this currency pair in just 10 years has appreciated tenfold compared to the S&P 500, which is kind of your, I suppose, investment reference point if you want to kind of see how things progress in risk terms and investment terms. Now, I'm going to put something else and just give you an idea. So moving on to another exotic pair, the Turkish lira, just to give you a sense of where we are with that. In a decade, Turkish lira has appreciated 293.7%. So again, it's had quite a big dip recently. So before that, it was actually more like 377%. Which would have made it about, well, not quite twice as valuable as the S&P, but you can see it's ahead of the S&P anyway. And again, in that case, you've got to factor in, the negative swap that you pay on the currency pair, because you're not doing a carry trade like a bank would do. You're just buying, you're getting paid for the rollover, but you're actually just buying the contract for difference. You're just buying the change in currency price, and I have to shoulder the negative carry from the USD side. So yeah, that's obviously how it is. So that's another kind of example of a currency pair that's actually valued higher or appreciated more than the and if I go back, you can see it's even more obvious, the kind of divergence of the two. So that's kind of where we're at. But going back to a decade worth of data, I'm going to put something else in that might shock you or might not. The US dollar index, I've put it into as Pixie, has actually appreciated this much or this little, depending on how you kind of want to talk about it. There it is down at the bottom of the yellow line, and if you look here, it's 17.61%. So it's appreciated 70% in a decade. And if I squeeze it all the way back to the start of the data, it's actually negative 8%. Okay, compared to nearly 9,000 of the dollar stroke Argentine peso. What does this mean? Well, it means that the US dollar is, as an index, because it's a weighted index, and the biggest component of that index is the euro. So we really have to look at the euro to get a sense of where the dollar is. But as an index, as a currency index, it's a kind of an artificial index combined of different currency pairs. It's performed very badly, and yet other pairs that have USD as the base currency have done really well. So the lesson here is that we can't just sort of look at the USD as a contributing factor to these huge appreciations in these other currency pairs, but really we need to look at how their counterparts, the quote currencies, have depreciated, and sort of keeping an eye out on fundamentals there is quite important. But as you can see, that it's not quite as easy as that, because surely in the Argentine case or in the Turkish lira case, there might have been some events that would have reversed these trends. But I think the train is too big to stop, and it sort of goes on regardless of any news at this point. Another one I'm going to put in is just for comparison again, because it's got USD in a name, is this, and I think it's kind of worth, because I've been discussing this quite a few times. So now we've got it in violet there, or purple, and again it's sort of down here, not particularly well performing. So in a decade it's done 53%, which again, it's pretty decent. I mean, it's less than the S&P, but it's more than the US dollar, and 9%. So again, thinking about where we're at with that, it's kind of a lesson in how currency pairs with USD in the name have performed over time. I'm going to finish with that, and thank you very much for watching this video. It was just a very quick video to talk about this area of thinking with currencies and also exotic currencies, so taking a wider view of currencies compared to an index like the US dollar index and the S&P 500. Thanks very much for watching. I hope this was useful, and see you in my next video. Bye.